Welcome to the life cycle of a trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, I'm going to show you how to turn a broken wing butterfly into a risk-free butterfly. Tesla.
Okay.
Big move today. I'm looking at broken wing butterfly on the upside here, on the call side. Did this for a small credit, plays up to about the 295 level, which is basically the highest that we've seen. 265 is my first long strike. I'm selling two of the 280s, and I'm buying one of the 305s. So it's a 15 by 25 long to short spread. So you have $1,000 in max risk here. Small 37-cent credit. So you have no risk to the downside, but really just playing for a little bit of a vol crush, maybe a little bounce from here. See what happens. Tesla has fallen out of bed over the last couple weeks here. We put it on a butterfly on the 2nd. So just to give you an idea of where the price was, it was about 243.5 when we traded this originally. The stock is now 219 and change, so it's down about 20 points. We had a wide butterfly. We were using a little bit more capital than we usually do. We were long the 265, short two of the 280s, long one of the 305s. So we're 15 points wide on the long spread. On the short spread, we're 25 points wide. So we were using about $1,000 in buying power. We did this at a 37-cent credit. It's actually marked right now at about a 30-cent credit as well to close this position. And the reason that is because this far out of the money call spread has gotten so cheap, this long option is actually holding a little bit of value. So this is a rare case, or I shouldn't say rare case, but one of the cases with a broken wing butterfly is when you enter the trade, you can do it for a credit, and you can also close it for a credit. And that is possible because of that closer at the money long spread that holds some sort of value relative to that wider out of the money short spread, which loses a lot of value. So that's one thing we could do. We could close this out for another 30-cent credit or so and take $66 in profit, or $65, depending on where we get filled on this position. One of the interesting things here is that we do have earnings coming up. So the earnings are on the 23rd here, so just a couple days from now. And into that earnings, you obviously have heightened implied volatility, big potential moves, especially in a stock like Tesla. You can see some wide price action in Tesla. So we can actually buy in this risk and give ourselves a little bit of a shot at some added profit if something wild were to happen. So from other broken wing butterflies and ratio spreads that we've done before, the way that you would do this would be to buy in the risk. So if you remember, 15 points wide on the long spread, that means, and we can actually see this on the analysis mode here. So we'll go to the at expiration, toggle this on, and zoom out a little bit. So you can see my risk is right up at about 95, right? Because I have that 15-point wide long spread. My max profit would be, a big $1,500 profit. Obviously a low probability of that happening if we do get right up to 275 and change. But my risk is here at 295. So if I can buy in my risk to 295, meaning sell out of this 305 and buy this 295, I'll free up all that capital that I'm using, the $1,000 in capital, and I'll essentially have this butterfly on, this equal width butterfly, the 265, 280, 295. I'll have it on for a very, for a pretty decent credit, actually. I mean, when you think about it, about 15, 20-cent credit, net credit on the position with a shot at up to $1,500. Now, when you quantify this shot, and let's just get filled just to get this on the board here. We'll try and get filled at 14 cents. Let's try 15. All right, so we got filled at 15 cents. So you can see my average trade price, 22 cents. So I've locked in 22 cents of profit. That is on the table. That's mine. I'm keeping that. I've freed up all the capital, so I'm not using any capital to hold this position. Now, the stock is trading all the way down here, 220. So it's a very low probability of actually hitting this. But how can we actually quantify the probability? So when you look at the position, you can actually use the probability of touch, but if you want, and that is toggled here. But if you want to do just kind of a back of the hand trader hack for probability of touch on a strike, you just take twice the delta, right? So you double the delta. A delta of 11 would give you somewhere around a 20 or 22% probability of touching 265 in the next 25 days at some point within that duration. So it gives you about a 20-ish percent probability of reaching some sort of added value on this position. Right now, it's trading at 44 cents. So if I were to close this position, I would take 44 cents in credit or around that if I got filled there. I'm leaving that on the table in exchange for up to $1,500 in potential profit at a 20% or so, probably less, probability of actually hitting any of that profit. So I'm leaving that on into earnings. The stock has been flying around. 265 is within reach of where we were just a couple weeks ago. So hopefully we get a little bit of a pop on earnings. The stock gets somewhere to like 240, 250, and I'll get hopefully about $1 or $2 out of this position. So I'm risking 40 cents for a $2 or $3 potential profit at about a 20% probability. So a long shot, but a shot we're willing to take for a little Johnny account to make some big bucks. All right, time to close one of our more interesting positions. Our Tesla broken wing butterfly, we turned into a risk-free butterfly, gave us a shot into earnings here. Tesla just reported earnings yesterday after the close, $36 move. I think it was probably 2 or 3 times the expected move here into earnings. If I remember correctly, the expected move was somewhere around $14 or $15. So it's definitely exceeded the expected move here into earnings. We're now back to where where we were when we started this position. You've had the benefit of some time decay, and you also bought in that risk. So just to see what that profit was, or that added value that came from buying in that risk, it actually netted us another 70 cents because we did this trade at 15 cents. So, or about 65 cents is our net on that position, 60 to 65 cents. So we've got this equal with butterfly. Now the question becomes, $1 million question is, do you hold this position or close it? And to be completely honest, the answer is totally subjective. Now, I have no principal risk on this trade. I've booked 22 cents in profit, covers all the commissions, fees, all the other stuff that some of the people in the chat get excited about. But for me, in such an extreme move, my thought is that, you know what, I take the profits, I take the money and run. I've added into this move $160 of value, is basically trading at pennies before the earnings. So I basically got all of this overnight. And for me, I think I take the profits here. It worked out perfectly. If you wanted to hold this and take the shot into the next 22 days until expiration, totally justifiable. And your risk moving forward is just the profits you have on the table. So you have to keep in mind you have no principal risk left in the trade. You can't lose anything you put out originally as risk. But you have 180 some odd dollars in value that's sitting on the table that you are risking through the rest of the duration if this stays out of the money. So for me, I'm always looking to take profits somewhere between $50 and $200 on most of my trades. This is the higher end of my trades in terms of profits. I'm ready to take the money and run, move on to something new. We can even do something in Tesla into the future. So to route this order, you'd be selling out of the 265, buying 2 of the 280s, and then selling out of the 295. You can see we've got a mid price. It's probably about 20 to 30 cents wide here, depending on where we get filled. And the spreads are moving around with the stock moving a little bit as well. Let's see if we can get an even 160, and we'll work our way down from there. We'll go to 158. All right, so we closed that. We actually got price improved on that order to 159. So we ended up closing out of that butterfly. We started with the broken wing butterfly, 37 cents. We bought in the risk at 15 cents, and then we closed today for a credit of $1.59, which nets us $181 on this trade in just about 20 or so days, 21 days. So a nice little trade here in the books. Earnings were perfect for us. They bailed us out. They got us extra profits on that trade. So it was a perfect execution there. We'll see if we can get some more into the future. If you want to catch these trades live, tune in to Johnny Trades every Wednesday at 9:40 a.m. on Tasty Live. Peace.